Good morning. Welcome to the BF Anderson Technical Report for March 28th. Been a fairly good week for the market. Let's get right into the charts. This is NASDAQ, continues in an uptrend. 2 weeks, 3 weeks ago, we had a little bit of difficulty. This week has been kind of mixed. However, we haven't seen any extraordinarily high volume to the downside, and we're holding the 25-day moving average. So the NASDAQ is still in an uptrend. On a weekly basis, we're seeing the same basic scenario where we're still above the 35-week moving average. The 35-week moving average still kind of flattening out. Last week, the volume was a little bit above average to the downside. We did test the 35-week, however, held and then rallied back. So now we are 1, 2, 3, 4, 5. We're on our 6th week above the 35-week, which is a very good sign. Advanced decline line, which is the number of advances minus the number of decliners. We are seeing net advances. We're seeing some net declines, but the net advance days are exceeding the net decline days, and as a result, the advanced decline line continues to be in an uptrend. Remember, with the advanced decline line, what you're looking for is the trend of the line, not the day-to-day fluctuations. Now, the high-low index, which we're measuring the number of new highs divided by the number of new highs plus new lows, we got somewhat parabolic. We've cooled down a little bit and starting to stabilize because we're really not seeing a lot of new highs, nor are we seeing a lot of new lows. In fact, yesterday we had 21 new lows. We are still basically trending below 40 a day, which is very positive. On a long-term basis, the 10-month versus the 20-month moving averages continue to be in an uptrend. The 10-month moving average has now turned up. The 20-month moving average continues to stay in an uptrend, and we're staying above this, which is basically telling you all looks good on a long-term basis. The trends are good. Now, on the put-call ratio, now remember what we're measuring here is are institutional investors buying options. Of the options they're buying, are they buying more puts, or are they buying more calls? Well, we get up here in what we call extreme fear, where they're buying more puts than calls, and down here would be extreme greed, where they're buying more calls than puts. It's somewhat neutral right now, so that's a good thing because we don't want to see the market get too hot or too cold, because if we get to a lot of fear, we'll be in a correction, but sometimes that sets up things. Now, one of the patterns that I'm looking at right now, because I try to show a different pattern every week. The NASDAQ has formed an inverse head and shoulders pattern, historically a bullish pattern. Note that the right side of the shoulder is higher and the index is broken above the neckline. So here we have, this is the big drop last year. We came down and we basically formed the head. You've got your left shoulder. Here's your neckline. So we basically have formed a right shoulder and then broke out of the right shoulder. This historically has been a very positive pattern, so it could mean that the market's going to go on and make some new highs. Now, the negative news is this. When the Fed came out and announced that they were not going to raise interest rates really plummeted, and a lot of talk about the yield curve inverting. This has had a dramatic impact on the financial sector. So you can see here that the financial stocks, meaning the banks and the insurance companies, their stock prices really broke down on very heavy volume. So I'm just simply saying one of the negatives here is the fact that the banks are not leading the way. Now, the other negative is the fact that the small cap stocks, now these are companies that are generally valued between $1 billion market cap to $10 billion in market cap. So the problem with these stocks, as we've discussed in the past, is they lack liquidity. So when it comes to institutional selling, most of the institutions, if they're wanting to get out of the market for various reasons, they're going to sell their small cap positions first because they know that they have this liquidity risk. So the fact that the small caps, as you can see here, they've pretty much broken down below the 50-day moving average. This is the 10-day moving average, which has done a little bit of a death cross here. We're not seeing outperformance by the small caps. So that would tell me, and with the financials being weak as well, I really think that I would, if I was sitting on cash right now, I think I would just sit tight. I wouldn't be in any big rush to rush into this market. In fact, my thinking for my portfolio will be I'm just going to sit tight until I see some definite improvement in the small caps and the financials. I'm just basically going to take that attitude. Could be wrong, but we'll see. Now, here are the top 5. Again, Chipotle Mexican Grill. You can see here monster volume, gap up buy signal, got above the 10-day moving average, and it's just pretty much held that 10-day moving average ever since that gap up. So the company's really doing well. And I will say I've been frequenting this restaurant. They have one at LSU. Big problem, of course, is parking. But their food has really gotten better. I think their food is they're under new management, and the food's gotten better, and the prices, like I can get in and out of there with really enough food for 2 people for under $10. It's very reasonable, and the food's good. I'm very pleasantly surprised. Now here's Mercado Libre. This is the Amazon of Latin America. They operate out of 18 countries. Recently, PayPal made a large investment in the company. Also, there's another company out there called Stoneco, symbol STNE. It's on the list. I'm looking at it. Warren Buffett has taken a very big position in Stoneco. Stoneco is based in Brazil, and they're involved in the payments, electronic payments business, somewhat like a Square. It's an interesting looking company, but I'm just saying that it seems to be that e-commerce is really catching on in Latin America. Ulta Beauty Salon, we've been in this stock before in the past. Very well run company. You know, it's a brick and mortar situation, but they also have an internet e-commerce presence. But you can see here you got monster volume, a gap up. Stock is holding very nicely above the gap. This stock looks very good. Main thing to realize, though, is that we did have some down volume here, but I wouldn't be too concerned about it. Xilinx, which is the semiconductor company that is involved in 5G technology. Again, you got your gap up, holding the 10-day. Now, you got a little bit of a violation in here, but, you know, continues in an uptrend, so it looks good. This is the cybersecurity company, Zscaler. A lot going on with these cybersecurity stocks. Palo Alto Networks, another company called CyberArk. There's a whole bunch of them out there that are doing well. This is a pretty competitive business, but the technology is getting better and better. Now you can see here when they announced earnings, big gap up, holding that 10-day, and even with this mini correction we've been kind of having in the market, even with the small caps, and you know this is like a mid-cap company, the stock has held up really well above that 10-day moving average. So all in all, I would say that because the small caps are acting squirrely, and we're starting to see a little bit of damage to the financials, I think I would sit on my hands for a few days, if not a few weeks. Let's just see what happens here, but we'll talk next week. Thank you very much.